Hi, I'm Ross Mayfield, investment strategist at Baird, and we are back for another weekly update with our friends at Strategas. Today, we are lucky enough to be joined by Ryan Grabinski, senior investment strategist at the firm. Ryan, how are you doing today?
I'm doing well. Just another Monday, and the market's only down a couple percent today. We'll see how it goes.
Yeah, it's been one of those months, one of those years. Very volatile in markets, and we are recording a little early this week, and I think it gives a good framework to kind of step back and say, all right, markets are moving very, very fast. There's a lot changing very quickly. So, what are the big picture themes that investors can latch onto that are a little more structural in nature? You all have done some great work around some critical themes. I want to kind of hit a few one by one. And I want to start with one that I've seen you write about before, the liquefied natural gas kind of explosion in the US over recent years and how that ties into the growing need for power and electricity, whether it's AI or crypto mining or XYZ, reshoring American manufacturing. So could you update us on that theme and how you all are thinking about it?
Yeah, certainly. So, I think, just bigger picture when you get drawdowns in the equity markets to the extent that we've seen the drawdown currently, it's a good opportunity to revisit the themes that you're thinking are ultimately going to be secular drivers of returns over the next, say, 3 to 5 years. And when I think about those themes, the need for additional power generation is certainly going to remain in place. A lot of it has come about because of AI overall and the need for data centers. But if you think about one of Trump's ultimate goals, it's to bring manufacturing back to the United States, and that is going to require come with its own additional needs for power generation going forward. Consumers are obviously becoming more and more sensitive to prices as it relates to their utility bills, and so this is certainly going to be something that the administration is going to continue to look at going forward, and that consumers are ultimately going to pay attention to. So the need for additional power generation, whether it's EV charging, bringing back manufacturing, data centers, building out new power plants. It's all going to be the infrastructure associated with it is going to be in place for the next 3 to 5 years, the way we see it now. We're not moving, there's some talk about potentially bringing coal-fired power plants back online, but at the end of the day, we're not building new coal-fired power plants. We're moving in the direction of more cleaner energy, and that really is associated with LNG overall.
Well, and you mentioned the need for power as part of the AI theme. I mean, AI is a whole separate theme that you all spend a lot of time on. Obviously, the stocks have been pretty volatile with some of the trade rhetoric, but how are you seeing the artificial intelligence theme as it sits today, using that secular growth framework?
So we're starting to actually see it shift from I call it phase 1.0, which is think about the semiconductor industries and those most closely tied to the technology industry. But I think we're seeing it shift into phase 2.0, and that's really thinking about the companies that are ultimately going to benefit from the implementation of AI going forward. I'll give you one such example. Netflix is talking. Obviously, we know, we have many users of Netflix here, but we've seen that they've added these ad tiers, and now they're all ultimately talking about implementing AI to kind of have more targeted ads. That's just one example. There's going to be examples in the healthcare industry and the financial industry to really streamline their revenues and target cost cutting potential. This is a theme that's not going to go away as in the next, call it, 3 to 5 years either. We're at the beginning stages of companies implementing this and trying to find the cost saving initiatives. And at the end of the day, it's only going to require more investment going forward. Do I think it's ultimately going to require the same type of investment? Probably not as so much on the technology side of things and the chip side of things, but more so on the software side, where you'll see further implementation and the ability to ultimately drive margins moving forward.
Yeah, that makes a lot of sense. All right, last theme. Let's end here. Even before all of the trade rhetoric kind of exploded in recent months, you all had been talking about deglobalization as a theme that you'd seen for years at this point and across different administrations. So how do you see that playing out, and who are the ultimate winners of a deglobalization trend?
Yeah, it's certainly the theme has evolved over the years. At first it was We had a micro theme of energy security within deglobalization, and at the end of the day, it's now we're moving into this theme of tariff beneficiaries within deglobalization. The more I would say, the more and more that we hear this rhetoric coming out of Washington, the more and more you kind of want to gravitate towards those companies that are less reliant on imports, so to speak, and especially those that are less reliant on imports that are closely tied to China. There's certainly a sticking point that Trump has with the tariffs as it relates to China, but it feels as though the tariffs outside of China are much more negotiable. And ultimately, there's going to be a rearranging of the deck chairs as it comes to supply chains, not too dissimilar to what we saw during COVID, where the supply chains were ultimately disrupted. But I think there's going to be a continuation of that. I would expect the nearshoring idea to continue to be relevant within deglobalization as we move forward here as well.
Ryan, this has been really useful, a good way to frame up the rest of the year and deal with some of the day-to-day volatility. Thank you so much for the time, and we'll talk again soon.
Absolutely, Ross. Always great to chat.